trade on Facebook and YouTube. Okay, cool.
Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Well, good Saturday morning to you. Welcome to another edition. It's Florida Talk Real Estate. We give you 2 hours of infotainment. That's a ton of information and hopefully a ton of entertainment. 2 hours worth, and that's every Saturday, whether you're on 92.1, 101.7, or Facebook. How about Facebook friends joining us right out the gates? That's Florida Talk Real Estate on Facebook. Nice to see you. Thank you for being with us. On YouTube, that's Florida Talk Real Estate LLC, a hub of a ton of really informative videos. And we go live Saturday mornings, 9 until 11. And if you have that free download, your iHeartRadio app, that means we are worldwide. And you are able to be a part of the show. Questions, comments, concerns in the world of real estate, don't be shy. Dial it up, 877-927-6969. Jimothy will get you going. You make those calls, we'll take those calls. Well, that's me, Johnny C., your air traffic control. And, of course, let's get you starting to line up on a Saturday morning. Always great to say good morning to my guy, your guy. It's the mortgage guy from the mortgage firm, Mike Rauch. How are you, my friend?
I'm doing great this morning. How are you, Johnny?
I'm pretty all right, brother. I had to deal with a little bit of rain on the way through, which I wasn't expecting today. But what are you going to do?
Oh, no. I see bright blue skies out where I am. It's a little windy, though. You know when the wind is kicking up, you can expect some rain, I think.
Yeah, it's nice to see the sunshine in your window. I have dark, gloomy skies. Is what I have. Thanks.
Well, then I know what's coming.
Quite possibly. It is Florida. So, my neighborhood, your neighborhood, front of the house, back of the house,
right.
Weather can vary.
I think I've heard it described when they're describing the percentage, like 50% chance of rain. That's actually a localized event, so it's 50% chance it will rain in your backyard. I've actually heard it described that way from a weather person.
I will tell you a story in a second. Was one of the most strangest moments of my life when I was a kid. But first, let me say good morning to Jimmy D, as I so affectionately refer to him. I always tell you he runs a top producing Keller Williams team. Well, that's the Florida Home Pros, y'all. Jimmy D, that's Jim DePola. How you doing this morning, my friend? Nice background you have there.
Yeah, we have technical difficulties, so now I'm in a different room. If you want to call it that.
It sounds small. It's really big, but it's a big space, but it sounds great.
He's got some of that cinematic proportional thing going on. You look like you're smaller than the chairs behind you.
Oh, do I? I'm not even seeing it today because we're having some technical difficulties today. So I'm just kind of getting through the day.
Technically, we're having some difficulties. Let me tell you this story. So
I want to hear this story.
I'm like probably 6 or 8 years old, and my grandparents, lived in Fort Pierce, so we visited like every summer. It was one of my first summers. I think my first summer in Florida was like 5, and so it was like one of my first couple. And I'm standing on their front balcony, and I'm literally at the line where it's raining right here and not raining right here. Like I could reach this hand out dry, this hand wet. There's the line right in between my eyeballs.
Yeah.
It was so strange because where I grew up and so many, like in the Northeast, like if it's raining in Philly, it's raining in Delaware, it's raining, right? Like it's raining everywhere. Where I grew up in Northern California, if it was raining in my city or town, it was raining in yours too. If we were friends or knew each other, or lived within 100 miles of each other. Florida, like it could be raining in the front of the house and not the back of the house. It's just I guess the tropics, right? It was my awakening to tropical weather.
I think it has to with it's the flatness of the terrain, right? Like that's probably the major distinction. You said you were 5 years old when you found that out. I was
a little bit older, 6, 7, 8, maybe.
Okay. Yeah, I didn't move to Florida until I was an adult. So I had a whole life of, normal rain, and then I came into contact with Florida rain, where like, if you're out there riding on your, driving a car or riding your motorcycle, you could see that wall, right? You could see where it's black and then it's not, right?
Yep,
and it's right. Just the sky is, or the there's like a shroud right in front of you, a
And
wall
my,
of
and my
dark.
favorite one, though, I'll tell you, my favorite one is the one where you look up, it's raining, and you look up and you're like, why is it raining?
Yeah,
There's just, it's beautiful.
that's when you know the rainbow's coming.
Yeah, I guess so, right? Hey, good Saturday morning there, Jimmy D.
Hey, I'm sorry I have to do this to the audience, but Jimothy, you're saying that we're all low still?
Yeah, very low.
Very, very low. Okay, so everybody kind of talk louder. I don't know okay. Let me try something, Jimothy, just to see if it makes a difference. Okay, I doubt it.
It sounds good in my
Is there any
headphones.
difference now?
If you're on
Not much.
Facebook,
Is there any
type
difference?
us a little message. How's it sounding on Facebook? I bet it sounds awesome on Facebook.
Okay, I couldn't hear you, Jimothy, when I took the microphone out. When I said, "Is it any better now?" Was it any better?
No, it's about the same.
Okay, I
Just
don't know
super
what's
low.
going on.
Sounds great. Good quality, just really low.
Okay.
If you're on Facebook, just type in a message there. I bet we sound good. YouTube too. I think the streaming aspect's fine. It's probably
more
the broadcast. Go ahead.
Yeah, I'm sorry. It's the radio show. It isn't
Right.
the Facebook or YouTube.
So go ahead and if you get an opportunity, you're not driving, you're not too busy, you can just let Jimothy know. You don't need him to come on the air. Call us real quick, 877-927-6969. How's it sounding on the radio? Because if it's just low on Jimothy's end, but it sounds good to you guys, we're not going to fret. But if it's really sucky for everybody's experience, we need to try to improve that for you.
Yeah,
877-927-6969. Just let Jimothy know. That'd be fantastic. And we thank you ahead of time.
Which caller is going to win? Caller number 5?
Yeah.
What do they win?
I'll tell you
know.
what, seriously, everybody that the first 5 callers that give us real information on the radio, I'm giving them $25 a piece.
What?
Whoa.
Just give us your address. I'm serious. Call up and tell us if you can hear it right or not. I really no
hold on, I'm
crank
dialing.
stuff or anything. No crank stuff or anything. But the first 5, I promise you, I'll give you $25 a piece just to let us know what's going on. If you're driving around in your car or
wait
you're
a sec.
listening to radio at home, I need to find out the radio story.
Is that a discount on a listing? Is that what you're doing?
Yeah,
$25.
Yeah. So I'll buy you lunch. That's what basically I'm saying. I'll buy you lunch as a thank you if you can let us know, because this has been driving me crazy for a while now. And
lunch with Jimmy. I like that.
Yeah, you could even have lunch with me if you want. I don't know how many people want to do that. I'd probably have to give them more money to have lunch with me.
Let me check my schedule.
It'll be extra money to do that. Oh, it's with Jim. I want 50.
Oh, Jim, what's that place we went to lunch that one time? They had them oyster things.
Oyster bombs over at
yeah.
I still go there. Oh, I can't remember, and I still go there to eat the oyster bombs. They're awesome.
I guess the name doesn't matter as long as you know where it is. But yeah, oyster bombs, those were
Johnny,
awesome.
did Jimmy tell you the recent story of he and my father and I had lunch together at, where did we go, Jim? Okeechobee Steakhouse.
Yep.
I swear we were there for probably, what, Jimmy D, like 3 hours easy, maybe even 4.
Yeah. Oh my
That's
gosh.
awesome.
And I haven't been imbibing much lately because of some stuff I've been going through. So then Mike's father likes imbibing. So I had one drink. I had one drink and I thought I'd be good. But then he started drinking classic martinis, and I love a good martini. So I was like, oh, I'll have one. Then it started feeling good. Next thing I know, I had 4. And I was feeling pretty good. I'm a teetotaler now, so I was feeling pretty good at 4 drinks and a meal. I was still feeling it, and that was a crazy time. But
you gotta have a good binge to keep you off of drinking. I think that's how it works, right? You have one, you just like throw caution to the wind one Saturday or Friday or whatever it was, and then you're like, geez, I shouldn't be drinking.
Yeah, and
is that like similar to like making your kids smoke a whole pack of cigarettes if you catch smoking and then they never smoke again? Yeah.
Yeah. You know,
you don't leave this room till you're done smoking these.
I've never. One of my relatives did that with my cousins way back in the day, the 1970s. Let me tell you, didn't work. So, Jimothy's saying we have 2 callers. Is that true? Are they calling to come live on air, or are they just calling to let us know about our quality?
I believe the quality.
Okay. Well, thank you so much for doing that. Don't forget to take down their address and phone number if they won't give us the address, so I can get the address so I can send them the information.
All
Okay,
right.
second sentiment. Okay.
What's the
All right.
Are
verdict?
they
though?
saying okay? Yeah. What is the verdict right now?
I didn't screen it out. I was just getting names.
Oh,
Oh,
okay.
let's get him on the air.
Yeah, let's get them on the air from now on. Okay, let's just hear what they have to say. I'd like to.
Oh,
I'd like
all
to know.
right,
Why
okay.
not?
Let's
Well,
do
we
it.
got
Who you want to
Tata
say?
Liam on the air with us right now. Tata
Let's
Liam,
let's
welcome
do
to
it.
Florida Talk Real Estate.
Yeah,
Hi,
let's
Papa
do it.
Liam.
Hello?
Yo,
Hey, Liam.
Hello?
Hey,
Yes.
Liam, can you hear us?
Yes.
Oh, I thought he was screwing with us.
How
I
is
thought
the
you were playing
radio?
games.
How is the radio quality today? Do we sound good?
I hear you very well. I'm in Loxahatchee on 92.1. It's working fine.
Great.
right.
Our sound sounds good. We don't sound low.
No, not to me. I mean, I have a
Okay.
volume button on my MP3 player here, so.
Cool.
But
Well,
I'm not. I did not raise my volume higher. It's just regular. I usually listen and I hear it just fine.
Oh,
Beautiful.
awesome, Liam. Thank you so much. Please leave your information with Jimothy. I'm not joking. I'll be sending you that in the mail. Okay.
heck yeah! Look at that. Just for having
All
the
right.
Just for
stones to
doing
call
that.
in.
And
Yeah.
thank you for listening and
Thank you.
calling. I'm so appreciative. Thank you so much.
Thank you very, very much. You want to say hi to John too, even though we know.
Yeah, why
how it
not?
sounds
Yeah,
to be?
because I'd like to hear a bunch of people just to see what's going on. Hey, John.
Hey,
Yo, good morning.
everything sounds great. It sounds just as good now as it did 2 years ago.
Okay, awesome. I'm on a different kind of system today, John. Is this John R that comes in every day and listens all the time? I talked to you last week. Is this the same John?
No, different John. Different
Okay.
John.
Okay. Well, I'm
Even
glad
better.
I'm glad that we're sounding good. Please leave your information with Jimothy, and we'll send you some. We'll send that into the mail. And thank you so much for telling us what's going on, because we've been freaking out about this for a few weeks. So I figured just bite the bullet. Let's find out.
Let's throw some money at it. Thanks.
What makes you think the sound is bad? Because it's great on our end.
Oh, well, that's excellent. I'm glad to hear that. Jimothy, Jimothy's the production guy. So what he hears in the main control board is what we're worried when it goes out. It sounds different. And that's what we're concerned about.
But as long as you're hearing it good, then we're happy. And thank you very much for being with us, taking the time to
Yeah.
dial us up too. Jimothy's going to get some information from me there, John. And you got $25 to go get some lunch or something. Congrats. Or maybe buy a scratch.
Timothy-
You're halfway to a $50 scratcher.
Yeah, that's true.
Timothy, have you swapped out the batteries on your what do you call them?
The
the
flux
little-
capacitor.
No, your hearing aids. Your hearing aids.
My meter is barely moving.
That is so wild. Okay, at least we know that everybody else is doing okay so far. So the callers, the listeners is what matters the most. So we're
Yep,
cool. We're
yep.
cool.
The amplifiers in the back are doing their job.
Okay,
Thank you,
excellent.
amplifiers.
Yes. thank
Remember,
you.
you can always dial us up toll free 877-927-6969. That is all your questions, comments, concerns. They can be handled. And for most of you, the vast majority, not comfortable doing that. Totally understand. I'm not comfortable on the radio ever. Just go to FloridaTalkRealEstate.com. It's your one-stop real estate shop. It is that simple. Your access to the entire team, pros. You find them all at FloridaTalkRealEstate.com. Or they're on Facebook as well, Florida Talk Real Estate, where we go streaming live every Saturday. Apparently sounding good too on Facebook. So thank you very much for all the updates.
Yeah, thank you so much. And we still got 3 more. So I'm serious. I'll give 5. So anybody
feel
calls
like-
in, let them know. Just
feel like
cut it
we're
off
like,
at 5.
You know when NPR does their fundraising,
Yeah.
once a month or whatever it is? I feel
Yeah.
like we're doing like a
I know,
fundraising
right?
drive right now.
Yeah,
Give us a call.
I know,
Support the
right?
channel, right?
Hey, now, I wanted to have a little announcement about the Facebook, YouTube live streaming. We're live on Facebook and YouTube every week, and then they turn into podcasts on those 2 channels. I'm seeing news reports that Facebook is going to stop the live streaming, especially for radio-related shows. They're clamping down on that. So what I'd like everybody to do, if they can, is to start getting the habit of going to YouTube instead of Facebook, because we usually have more Facebook listeners than YouTube listeners. You don't necessarily have to become a signed up, logged in YouTuber if you don't want to do that. You just got to type in Florida Talk Real Estate LLC in the YouTube channel, and then you'll see us live and you can click on it. We would love you to subscribe and follow to both the Facebook and the YouTube, so you can get notice when we're live. But if you could start moving over to YouTube, because at one day, all of a sudden, we're never gonna know. It's just gonna happen where Facebook isn't gonna allow us to do the streaming anymore. So when that happens, please switch over to our YouTube channel, which is where we want most of the great information is coming from our YouTube channel anyway.
I just did some thorough research right this second, and it looks like they're cracking down on copyrighted material. So if you were streaming like a radio station's broadcast with copyrighted music or content, then they're going to crack down. I don't think we're not in that category.
And they've been doing that for quite some time. I think they're going to increase the focus, because when I used to do the backyard thing during the first season of the pandemic, I'd play music in the background and they'd flag me and because it was copyrighted, right?
They gave us some nasty stuff like 2 years ago about that, and we disputed it and explained, hey, we're part of iHeartMedia. They know what we're doing. They have no problem, and we don't use any proprietary music. That's why we don't have any cool music on our on our intros and outros, because I don't want to get involved in that. And they let us back on the air because they banned us for a couple of weeks, but they let us back on. But it's never been the same as far as syndication. Like, they're not promoting it the same way that they used to. So the audience is dropping off a little more, except for our core fans that are going there all the time. But those core fans, if you could start going over to YouTube, that would be really great. Okay. But in the meantime, we're going to keep doing it until they say no more, right? Until Facebook people or the Meta people or whatever they are, until they say no more, don't let the door hit you in the butt when you're getting out of a metaverse. I'm okay with that. But we're just going to run it into the ground until then. So let me, if you don't mind, I want to do some shout outs because it's been a while. I'm going to do a couple of shout outs, and then we're going to go into, well, I guess let me just start off with what we're going to talk about today. Okay. We got a lot of really good things. First thing, I really want to talk about whether we're going into a bubble. Like, have we been in a bubble, and is the bubble going to pop? Because it's one of the most trending searches that are out there. Real estate bubble 2022. Are we in a real estate bubble? These are searches that are happening on Google all the time, and they're trending, and they're usually in the top 50 searches. Sometimes they're as high as the top 10. So people are wondering about this all the time. Then you're seeing stuff in the newspapers about like trying to deal with these increased landlord, the jacking of the rental rates and what landlords are doing. Some of the cities are trying to slow that down, the rental rates increasing by giving renters a little more rights about rental increases. So we're going to talk a little bit about bubble. We're also going to talk about, because we have to, interest rates. Interest rates have gone up again from last Thursday to this Thursday. Yay for interest rates, right? I know Johnny's like, he's really giving a finger with a fist without the finger in it because he's ready to make a move on something, and the rates keep going up. And then we're also going to talk a little bit about what you should be doing to fix up your house to sell it, because there's so many people that aren't doing the right things when it comes to that. We're going to talk a little bit about that today. But let's start off with the shout outs first, because we've had so much stuff going on in the last couple of weeks, and I've just been drinking. My whole staff, Natalie, Scott, Nancy, we've all been just drinking through a fire hose, it seems like. Mike, how many crazy things have we dealt with last couple of weeks together with all our buyers and everything?
Yeah, it's a pretty frantic mode with buyers. Like, everything has to be super, super fast, and then there's a lot of disappointment.
Yeah.
Right. It's like you're not winning every offer. It's a lot of ups and downs as a buyer these days.
It really is. And we're also going to talk about, with the interest rates, not only you need to be talking to the loan officer or mortgage broker constantly to figure out to make sure that things haven't changed for your buyer, but on top of it, we've also had situation where for the first time I'm dealing with a customer. Mike talked to this customer that might be using an ARM, 5-year ARM, to buy a house. And we're going to talk a little bit about that. Not specifically about that person, but just about, is this the beginning of a trend where people aren't using 30 or 15-year mortgages to get into a house? They're trying alternative mortgages because they can't afford a 30 or 15-year mortgage and buy what they're looking to buy. So we're going to talk a little bit about that. Is this a little bit of a trend that we're going to see? Or is this just a one person thing? We don't know yet, but it might be the beginning of a little bit of a trend. So we're going to talk a little bit about that. But let me just go over some shout outs. Ken and Ivania, we put their house on the market a week ago Thursday. By Monday, we had, I think, 93 showings. Ken called us last week while he was kicked out of his house. He decided he wasn't going to stay in his house that weekend. He ended up having over 90 showings on the property Friday, Saturday, Sunday. We had we had 19 offers by Monday. We started negotiating those offers, 19, right? We started negotiating those offers. By the time we were done on Wednesday or Thursday of this week, we still had another 3 or 4 stragglers coming in. So we had 20-something offers on that property. We took more than 10% over list price, and now we're just waiting for the inspection. And Ken and Ivania are seller buyers. So I structured the deal where they have 90 days from the time they went into contract before they have to close. And that gives them 90 days for us to go find their new home so that they're not homeless. So don't tell us that seller buyers don't work. We do it all the time. And Ken and Ivania are halfway there. They got the house sold. Now we just got to find the house that they're looking for. So congratulations, Ken and Ivania.
Did you talk to them, Jim, about our policy against homelessness?
Yeah, I know, right? Nobody becomes homeless when we do this stuff.
It is a strict policy. Yes.
Yes, it is a very strict policy. I've had people go homeless on us years and years ago. And that's why I started creating systems for us. Like, how can we do this in a way that we can not guarantee that they're not going to be homeless, but give them the best shot that everything could be done is what we call a simultaneous close. That means that you sell your house and then you use the proceeds of that house to buy your new home on the same day that you sell your house, so that there's no downtime between selling the house and buying the house. And that's what we try to get done all the time. We're going to talk about, we're also going to talk about, related to the mortgage rates and everything, new techniques that they're old techniques that we're bringing out of our toolbox again to help customers deal with all the craziness with the mortgages and the lack of inventory. We're going to talk a little bit about that. Okay. Also just wanted to give a shout out to Tara. Scott put up a listing for them about a week and a half ago. That's under contract. Congratulations. Nice. Bruce and Robin, that property was in West Palm. Ken's was in Boynton. The next one I'm talking to you about is in Pembroke Pines. We sold a condo for Bruce and Robin. The house was not in good condition. We admitted that up front, said that it needed pretty much everything. We got the condo sold for above list price because we did it the right way. We had multiple offers. Bruce and Robin seemed very comfortable with the deal that they took. We're just waiting for the inspection, and then we can wrap that one up. That's in Pembroke Pines. Wanted to give a shout out to Jose. He came to us to sell 2 properties with Natalie, one in Royal Palm, both of them in West Palm Beach. We have them both under contract now. Everything's looking good for that right now. So congratulations to Jose. We got both his houses sold.
Jim,
and looking forward. Yeah, Mike.
Have you heard the one about the Latin plumber with the twin boys?
No.
Jose,
is this a joke?
Yeah, Jose and Hoseby.
Jose and who?
Hoseby.
Hoseby.
How dare you?
No, I didn't hear about
Jose
that.
And Hoseby.
Hoseby. Yep. And then and thank you. Sorry. And thank you, Stephen, for Stephen is selling a membership equity property in Aberdeen, which is a great golf community in Boynton Beach. I'm staring at the community through my window in my office right now with my new office, I should say, according to the look I have today. And Stephen came to us because he watched us sell another Aberdeen property about a month and a half ago and saw how much traffic we got and also the price we got for the house. And he was like, we need to hire that team to come in and sell our house. So we got the new listing. Scott's working on that listing right now.
I feel like that's the moment that everyone who bought at a membership equity community is waiting for, because they get to recover that cost when they bought in, and then money comes right back to like, yes.
Yeah, and the membership equity is really, really hard sometimes because people don't want to pay the membership equity sometimes. But and it
Definitely
could be
the pool of buyers is smaller because of that big chunk of change. That's not like you're part of your down payment requirement.
Yeah,
so we're not talking like $2,000-$3,000 typically, right? We're talking like tens of thousands of dollars, right?
I think in Aberdeen, I'm not looking at the listing right now, but the Aberdeen, I think even the social membership is 40 grand a year. It might be 40 for the golf and 20 for the social membership. I'm not sure.
Probably
but
not,
you're talking
per year, Jim. But just that's
no, not per year.
Yeah.
But then there are fees on top.
$40K you got to come up with on top of buying the house,
right?
Just
So
to be able to buy that house in that development.
Not all of it. You get some of it back. And then also, I don't know about Aberdeen. Okay, I'm sorry, but sometimes with the membership equity, let's say you get it's $50,000 to walk in. Sometimes they say, and then you'll get 25 of it back when you go to sell it later. Those properties, Aberdeen is a very highly desirable property because it has like something like 4 restaurants in there, and anything you want to do. It's almost like, except for shopping, you don't have to leave Aberdeen if you don't want to, except to maybe go shopping or fix your car or something like that, right? You have restaurants there, you have entertainment there, you could do whatever you want there. It's pretty cool. So if you're looking for like a vacation-y lifestyle and you really want to feel like you're in South Florida, enjoying Florida lifestyle, that's a really awesome place to go. But you have to pay a little bit extra in order to have that experience. And some people are really into it. I had a guy call us from our advertising that we put out for that from New York, and he flew down here. He keeps flying down here to look for properties. And he called me up very frustrated about 2 days ago. And he's like, look, I just came down there to look at like 4 or 5 properties. And on the plane, I saw your property come up today on the plane home to New York.
Whoa.
I don't really want to fly back down right now. I'm still at the airport, tell me about the property. So we have Scott working with him right now, trying to see if that's a good match. But there are people that are looking specifically for membership equity properties.
Oh, I'm sure. Yeah.
And the other thing is I don't know if sellers are hearing what I'm saying, but yes, we do advertise in New York, New Jersey, Connecticut. We do that on purpose with certain properties because there's a lot of buyers, and we're going to talk about this when we get to the mortgage rates and stuff. There's a lot of buyers out there from the Northeast that might want to buy your property at a very, very high price. So we're putting our properties out this year and last year more and more to the Northeast so people know what's going on. Just one other shout out that's a little different. This is for Player Performance First in the Perry CPA Group. As you know, I've talked about on the air a few times that I bought into Jarrett Perry's sports agency called Player Performance First, and we have some very exciting news. Two of our recruits are going to be in the NFL draft next week, and I'm really excited about that. We have Antoine Owens from Jackson State. Yes, that's where Deion Sanders is the coach.
Uh-huh.
So when Antoine gets picked up by a team next Saturday, a week from today, I'm hoping that we're going to have an interview with Deion Sanders later, which will be really cool to have Deion to talk to us about Antoine and just being a coach nowadays. Deion's gone through a little bit of problem. He just had to have I think it was his big toe amputated, if I'm not mistaken, but
Really?
One of his toes just got amputated. I felt really bad for him. He had a really bad infection on one of his toes, and he had to amputate it. It was like big news about 3-4 weeks ago. So hope he's doing okay.
Yeah,
And
prime time. No longer 10-toed, huh?
yeah, no more 10-toed. He might be 8-toed.
9 time.
He might be 8-toed. I'm not sure. It might have been 2 toes. I'm not sure. But I think it was his big toe, which is a bummer because, you really need that toe.
One of my best buddies growing up had a missing big toe. It got chopped off by a lawnmower. Yeah.
I don't know how that didn't happen to me. I grew up cutting lawns.
He has his shoes that he was wearing. I don't know why he was wearing, but he was wearing a pair of black Jordans. I don't know if they were Jordan 1s or 2s or whatever, but this must have been I don't know, 1991. So I don't know what version of Jordans, but he still has the shoe. There's a nice clean cut kind of diagonally across the toes, and yeah.
Why
his
would you
nickname
keep
was
the
Nine
shoe?
Toes.
Why would you keep the shoe? I don't understand
Because it's awesome.
They're Jordan.
He like, this is the shoe that I was wearing when I got my toe chopped off by
when
my
I was
lawnmower.
being a dumb, you know what? This is the shoe I was wearing. I was being a dumb, you know what?
I don't think he had to cut the lawn anymore after that. I think he got out of lawn cutting chore.
I love that. That's so funny. I love that. That's so funny.
Seems like a simple sacrifice, right?
Well,
Yeah.
yeah. So getting back to Antoine Owens, though. So Antoine, next Saturday, we expect him to go on Saturday's part of the draft next week. So really looking forward to that. And then we have a second player that PPF picked up, Akil Byers. He's from Mizzou State. These both are guys are defensive guys, gigantic mountain men. You know, guys like you expect. They're linemen. Akil is
Jim's
also
hot and bothered over there.
I'm sorry, what?
He said you're getting all hot and bothered over there.
Oh yeah, yeah.
Gigantic mountain of men.
Yeah, mountain men, right? So Akil is at Mizzou. He's also ranked on ESPN to go on the draft. So we're going to be supporting our guys next Saturday. And then what's happening is I'm also now part of the Keller Williams Sports and Entertainment Division. It's a very exclusive group of about 1,000 agents across the country for Keller Williams. You had to be vetted to get in. You couldn't just like sign up. You had to show your credentials and get approved. And now I'm part of the Keller Williams Sports and Entertainment Division. So I'm going to be sponsoring a draft party for Antoine. That's my first ever draft party. I'm really excited about it. We're going to hold it in Orlando. So we got an Airbnb for Antoine's family, and they're going to go there, and we're going to do a little draft party for him. And then we're also sponsoring a draft party out in Arkansas for, or Arkansas, as my friend in high school used to say, is going to be, we're going to hold a draft party for him in Arkansas for Akil Byers. And that's going to be sponsored by another Keller Williams Sports and Entertainment agent named Miranda Watson Williams. So I'm really looking forward to seeing. This is our first draft parties. We never did this before, so it's going to be fun and exciting and new and different. And then this is going to get us wound up for the NBA draft because we picked up Keon Ellis, who is supposed to be somewhere in the 20s to 50s of the draft, which I hear is pretty good. I'm not that big of a sports guy, so I hear if you get drafted 20 to 50 in the NBA, that's pretty good, Johnny, right? That's pretty good.
I feel like you get drafted at all, that's pretty good. But
yeah, well, that's true. That's true.
If you're 20th or 30th overall, yeah, you're crushing.
You're elite. Yeah, they're all elite, but elite. So,
well, I mean, the reality is that, you could go first overall and be a bust.
Yeah.
So, it's wishful thinking at this point, and hopefully it pans out for their careers.
Yeah, so I'm really excited for these kids. It's so much fun watching this. Just to watch the dedication that they spent their whole lives up to this moment. They're in their early 20s, so they don't even have the big picture of life yet. I'm an old guy compared to them. So it's just really interesting to watch and very inspiring in a lot of ways to watch these kids going through what they're going through and talk about pressure. Lots and lots of pressure for these kids.
Well, they all have very different paths, kind of like real estate. Everything's like a snowflake. It's all very different. Some paths are, they seem, gold laid paths, and you're like, oh yeah, he didn't really work hard. And then you see some of these stories and you're like, man, the sacrifice from the family, like it was really a commitment by mom and dad. And they took everybody to make a commitment to get them in the position they're in. And they still have to hope that they can, get put in a position to showcase their talents and make this their career path. It is, like you said, it's really, really, it can be emotional when you're watching some of these stories, and especially if you get connected to them.
Yeah, I can't wait. And if you guys want to follow this a little bit, we won't have too much on Facebook about this. What we're really going to be is on my Instagram channel. So if you want to kind of follow these athletes for the next, week or so, and find out what happened, all you got to do is go to my Instagram account, which is Florida Talk _RE, Florida Talk _RE. Go ahead and like and subscribe to the site, and then it's going to be picked up by Player Performance First. Of course, Antoine and Akil have their own Instagram pages, and then we're going to be also working very closely with Paul Aloisi. Paul Aloisi is a sports agent that Jared has hooked up with to deal with the two NBA guys. Paul's awesome. Can I tell you? We need to take a break, but can I tell you a funny little sports story I had this week, Johnny? I think you'd like it a little bit, right?
Yeah.
So Paul Aloisi was part of the Jimbo Fisher group at FSU, and he won a national championship. Paul is now an attorney and a sports agent up in Tallahassee. And when I congratulate him that he's part of the Jimbo Fisher, national championship team, he goes, "Well, thank you very much, but I was more of a bench warmer." So he's very humble about, what he accomplished over there. But heck, just getting on the FSU team during that, that era of transitioning from, who was the coach before Jimbo? Can you believe I can't remember the iconic coach's name anymore?
Coach Bobby Bowden.
Thank you. Oh my God. For 3 days, I couldn't remember the guy's name. So he was right in that transition from Bobby over to Jimbo Fisher, right? So anyway, I'm looking up I'm not going to mention the athlete on the air because they don't like when people drop names, but I'm going to tell you because it's funny. So there's a former UF guy that played for the Patriots and the Rams, right? And he was a defensive guy, and he was a beast, but he only played for 4 years because he was severely injured a bunch of times in college and football. But he did win a championship ring with the Patriots. He was there 18 and 19. He was defensive guy, and I can't remember. He wasn't a back. I think he was a lineman, okay? But what ended up happening is when I started reading the UF guys or the Patriots guys' background, I'm like, I think he's a contemporary of Paul Aloisi, right? And he played for FSU. This will be fun, right? So I called up Paul and I told him, "Hey, I'm having a meeting with this other guy. Do you know this guy's name?" And he goes, "Yeah, I know who he was. He was like kind of like a senior when I was just getting in with FSU." And he goes, "You tell that guy," he goes, "You're talking to him on Friday." This is yesterday, right? I go, "Yeah." He goes, "You tell him that our team kicked his team's, that year, right? The year that they both played together." So I go back to the UF guy. I don't know him very well yet, right? I think this is the second conversation I've ever had with him. And I say, "Hey, by the way, there's this sports agent that works with PPF all the time, Paul Aloisi." And he said that he wanted to remind you that his team kicked your team's butt that year. And without missing a beat, this guy, right, because of this rivalry between the Gators and FSU, without missing a beat, he goes, "You know what?" He didn't know who Paul was. He goes, "You know what?"
Who?
He goes, "You tell him that the reason why we didn't kick your butt that time was because I was injured that game." Didn't miss a beat. So I haven't told Paul yet. I'm going to go back and tell Paul, which I think is going to be funny. So anyway, I just thought that was kind of interesting. And this is all about like 10 years ago, 12 years ago is when they played, I guess, is about the time that they were playing. So anyway, I just thought that was very interesting. So I'm learning more and more about this sports stuff all the time. It's kind of cool.
Yeah, well, you're involved with a sports agency, PPF, Player Performance First.
Yeah. So shout outs to everybody. I know we're running a little late. Just let's go ahead and take a break. When we come back, I think we're going to start with interest rates, Mike, because that's the big news. And because their interest rates from there, everything's going to branch off from that. Like, are we in a bubble? Not in a bubble? What do you do with the rising interest rates? All that. So we're going to start off with the interest rates first because that's the news. Okay.
All right, good. We got a lot to get into, and obviously you have questions, comments, concerns. You're welcome to be a part of the show. Do not hesitate to dial 877-927-6969. Jimothy line, yep, we'll get you going. And of course, if you're not comfortable on air, totally understand. You can reach the entire team, your one-stop real estate shop. Remember, it's FloridaTalkRealEstate.com. Write it down. Do what you got to do to remember, FloridaTalkRealEstate.com. Your one-stop real estate shop, access to the entire team. You even have the hotline there. You can dial it whenever you'd like, 24 hours a day, 7 days a week, 888-973-7828. You'll find it all at floridatalkrealestate.com. Back 4 minutes from now. Great to have you with us. Facebook, YouTube, on the radio, and worldwide on your iHeartRadio app every Saturday. 2 hours of infotainment. It's Florida Talk Real Estate right here. It's Real Radio.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter.
Hi, this is Dan Patrick, and here's what's trending from the iHeart Sports Network, presented by Mercedes-Benz.
The Marlins will throw Eliezer Hernandez, trying to bounce back from their shutout loss in the series opener against the Braves and end their recent road losing streak. As they get set to take on the Maple Leafs, the Panthers look to continue their long winning streak and stay in the lead for the President's Cup. Florida will be in the running for
should I hit the refresh or no?
As Dylan Lonergan puts the Gators in his Title V school.
What do I do?
Groundbreaking runs in the
It's
family.
been like this for
runs
about
in the family.
2 minutes.
Extraordinary runs in the family. The 2022 Mercedes-Benz range of SUVs. Every member waiting to impress. Learn more at MBUSA.com. Mercedes-Benz, the best or nothing.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy.
Okay.
Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title Llc is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1, and we are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
I'll say it again, 877-927-6969. That's toll free. Jimothy will answer your call, line you up, and we'll get you on the air with your questions, comments, concerns. You can be a part of the show. We got plenty of time for you on this Saturday, 2 hours to be exact. We take you 9 until 11 up into the locker room. I'm Johnny C., your air traffic control. Let's say good morning to your lineup here. Mike Rauch, the mortgage guy from the mortgage firm. He's with us. Hello, Michael.
Good morning, sir. It's starting to get dark out my way, so.
Oh, damn. Yeah, it hasn't changed for me. It's still kind of, just looks that way.
I haven't looked at the weather report, but I'm sure it will come and go,
yes.
like always.
Yes, exactly. And they are saying that, hey, we could use the rain. I mean, I'm not going to complain as long as it's not like all weekend. But the low humidity, it should be a pretty nice weekend. At least as far as I understand.
Oh, you're talking to me? Sorry.
Well, yeah, I mean to you, to everybody. But
to everybody, to the
it
world.
It wasn't a question. It was very open-ended. It was like, yeah.
Listen, as we get into the summer, I will take any of the cool breeze, especially I'm working outside on a deck project, Johnny, and it's kind of like a late afternoon, evening, and weekend project. But it's a big project, so it's taking a while. So
well,
yeah,
I know it's a big project. I heard you're a size king. It's probably a big deck.
It's huge.
Yeah,
it's huge. You know how I roll.
Probably on that deck as much as you can get on it too.
Yeah. I like to, I like to think big. I like to act big.
Yeah.
I like to. What'd you say? What'd you call it? Size king.
Yeah.
Yeah.
That's right.
That's probably the best way to do it.
Bigger the better. That's what I've always heard. Yeah.
Speaking of size kings.
I was just gonna say this is a perfect segue into Jimmy D. That's Jim Paola with the Florida Home Bros team. Keller Williams, top producing team, the size king of size kings. Jimmy D, how do you be?
I'm doing all right, I guess. So I want to get in because we had the break a little late because I'm still having technical difficulties with the StreamYard, the system we use for Facebook and YouTube. It's slow, but guess what year we're in today? We're in August 2009. And the reason why we're in August 2009 is because that's the last time interest rates were this high. August 2009.
That's what I was saying. You know what I was saying at that time? I'm never going to buy a house.
You were saying that in 2012 and 2013. But so 2009, this is almost 3 years or maybe more than 3 years before we started our radio show. That's how long the interest rates, they were not this high. We had to be in the crash. 2009, if you don't remember, is like right at the precipice of the national calamity stuff, 2008, 2009. So that's where we are right now is 5.11. I'm not saying that the interest rates are going to make us have a crash. I'm not saying that we're going to have what we had in 2008, 2009, but it is interesting to point out that the last time that we had these rates was August 2009. And
what's interesting? I'm looking at the chart right now, Jim. So 2009, but all leading up to that, rates were higher.
Yes, I was going to say they were actually going down at that point.
Yeah, they were going down to that level in 2009.
Yes, that's
where
correct.
Now we're on a very, very steep incline from like way record low rates.
Yes, so August 2008, since we're getting wonky here, I like doing this part, right? So August in 2008, we were almost 6.5. August 2008. Then August of 2009, we're at 5.11, or actually 5.12 for the week I'm picking, right?
All right.
So
this is the only way to look at this chart and feel okay. Is when you look at the all-time chart. So, August or June of 2006, Jim, the average rate was 6.62.
Mm-hmm.
Right?
Yep.
July of the year 2000. Right? Average interest rate, 8.09.
If you go back all the way to 03, Mike, this rate that we're at now from basically September 08 all the way back to September 03 We were at
Yeah.
much higher rates. We were in the sixes or higher
close to
for
6.
almost that whole period of time.
Yep.
So when you look at the long chart, we're doing pretty good. But if you're looking at today's chart over the last 6 months, forget about it. It looks
if you've been a shopper, if you've been a pre-approved buyer since December, you hate that chart. You hate this chart because your rates have gone up.
Well, exactly 2 points.
I was going to say approaching, depending on your situation, approaching 3 points. You might have gone.
Yes, that's right.
A 3 to a 6.
Mm-hmm.
Crazy.
It is totally crazy. And Johnny, you know this answer. Every time the interest rate goes up 1 full point, which means 1.0, not 0.1, but 1.0. Every time it goes up full point, how much does the purchasing power disappear?
It's 10%, right?
Yep, it's right around 10%, maybe 11, but I would round it off to 10 because the number's so weird. So
you might have gone, Mike. You in the scenario you just laid out, you might have gone from somebody who can buy a house to can't. Well, at least not in the range you were looking in anymore. It's just
if you put those like that 1%, 10% kind of number in real world context, if you're qualified for a maximum payment, let's say that you're sitting at your max, right? So you may have been qualified to buy a home at $500,000 with a 20% down payment, right? And that hits your max payment. Well, now if you've lost 1% of purchasing power, you have to buy that home at $450,000 with your 20% down payment to get the same payment, to result in the same payment. So
But the pain doesn't stop there because January 1st
prices haven't come down.
Well, not only that, but January 1st, we were at 3.11. Now we're at 5.11. That's the number from Thursday was 5.11. So 2 points. 2 points.
You have maxed out. If you're maxed out on your payment, you basically lost 20% on what you're able to buy. And you end up with the same payment.
In that scenario you just gave, you now have to buy that $500,000 house at $400,000.
That's right.
Mm-hmm.
And you have the same payment as if you bought it at $500,000.
Right.
Yep.
Same monthly obligation.
Yeah.
But maybe more because the insurance might be higher now.
Yes, exactly.
I hate to laugh about it, but
well, here's the thing though. So
it's better than crying, right?
You can't go back in time, and this is going to lead into your next part, Jim. You can't go back in time and recover those rates. You can always buy a lower rate, Johnny, and spend some money, throw some money at it, right? So if you got money in reserve and you still want, a 4% rate, okay, you can do that. It just you're paying thousands of dollars to do that. So that's one way, I suppose, of going back in time. But in general, you can't, right? You got to deal with what the market is at right now, and you got to qualify for the payment with what the market is at right now, and you kind of cross your fingers that it doesn't continue to go up. Who the heck knows? I mean, it's going up, Jim. It's like almost a quarter of a point every week. It's just it hasn't gone up that much this past week, but it is in my position, I'm having to really dial in the rates on pre-approval. So the rates that I'm estimating people are going to be at before they're in contract, right? Before it's locked in. I'm having to make adjustments on those almost every time I'm sending somebody numbers, right? Gone are the days, and this is really illustrative of you can't just go with your generic pre-approval and go out there shopping for months, right? Hey, you're pre-approved for 500,000 and you're out there shopping. If you're pushing your limits, it has to come down, right? It has to come down if you're pushing your limits because rates have gone up. So you have to be really in tune with where the rates are right now, what to expect when you're trying to answer the question of, can you close on this house? Right. So you have to deal with the market as it is now. But Jim, so that's what people are trying to decide. Like, well, when's it gonna change? When are the rates going to come back down? When are the prices going to come down? What's the
not
future
happening.
hold?
I'm sorry, it's just not happening anytime soon. The Fed doesn't want the interest rates to go down. I'm not saying this is a bad thing, but the Fed wants the interest rates to go up. They want it. It's happening because they want it to happen. Okay.
And is it the simple answer because they're fighting inflation? They're
Yes.
trying to keep housing prices from
they're willing to
go up.
They're willing to settle. They're willing to sacrifice the real estate market in order for lower inflation. I'm sorry, what happened? I'm sorry, you guys are pointing around all over the place.
Donnie said what I was thinking.
Yeah, they're using inflation as the like acceptable excuse. Most people will be like, all right, yeah, do what you got to do. We've needed to do this. This has been something we've needed to do for a long time, and they've just never done it. They've refused because of the economy and whatever. We can't affect, we can't have more upheaval than what we've been in. We've had a lot of problems for the last 10 years, easy. And I understand that perspective, but now they're in like this urgent mode for some reason where it's like, well, we got to hustle and get these up, and it has a big impact, but they're using inflation as the acceptable reasoning. Here's the thing you're going to notice. It's not going to affect anybody's day-to-day and their cost in inflation. You'll notice it because, well, you live life and you spend your money, you make your money, and you're going to eventually go, how is this fixing inflation? Well, you'll find out.
Well, it's how it's going to fix it, right? They got to crush our economy like a bug, just like they did in the late 70s, early 80s. That's what Volcker did back then, right?
Yeah, at least our inflation's not as bad as most inflation.
Or Greenspan. Was it Volcker or Greenspan? I can't remember, the Fed Reserve guy back then.
I think it was Greenspan. I
think it was Greenspan, not Volcker. Yeah, I forgot.
That sounds like a very, very general description. So they're trying to crush the economy. Can you be more descriptive? What's the idea?
We're hyperinflated right now. We haven't seen this inflation for 40 years.
So that has to do with overall costs going up and wages.
Yeah, and the thing that bums me out about this, I got to be honest with you. How long has business been booming? Right, for 10, 12 years, but the employees start getting some raises, and it lasts like a year. Right. And all of a sudden, all big business and government's like, oh, we got to slow down the economy. We got to slow down the economy. People are being paid too much. It's costing businesses too much for these people. We don't have enough people for the jobs. So we got to tamp down the spending power, basically, of regular working people. But they have no problem giving big tax breaks to governments. I mean, to businesses, with the exception of Disney. Right. But they have no problem giving tax breaks, in general. And I'm not talking about any specific government. This has been going on for, even when the Democratic guy, I don't remember the last time the Democratic guy was a governor in Florida. Who was the last guy? It wasn't Childs. It was somebody after. Imagine Lawton Childs way back then. I don't remember who the last Democratic governor was, but it doesn't matter about that too much when it comes to this stuff. Everybody always says, oh, you can't pay the workers too much because they'll hyperinflate the economy. Well, our salaries as workers have been so paltry for raises for so many years, right? For so many years. How many times people weren't getting even cost of living increases based on, the current cost of living increases, right? They weren't keeping up with that. Now that they're finally making up some ground, everybody's like, oh, that can't happen, which I totally don't agree with, because I think you should give it to the middle class the most. They're the ones that pay the most taxes, right? They do the most stuff and they spend the most money. You give it to the middle class, the economy is going to be fine because they spend.
There's about as much logic in that approach of, they'll drop the inflation will be crazy, they'll crash it. There's about as much logic in that, probably less than the whole trickle down theory.
Exactly. Exactly.
We'll be okay. Let's give it a go.
So they are trying that. I mean, if you read the Fed minutes, and I'm crazy enough to do that kind of stuff, right? When you read the minutes and you're hearing all those 14 guys or 12, not just guys, but 12 professionals that run the reserves all across the United States, and they talk about this stuff. They're trying to slow down the economy because they're afraid that we're going to go into runaway hyperinflation. So they're trying to slow everything down. And I've been reading a lot of articles saying, hey, by doing that, the biggest people that are going to be impacted is the real estate industry. Right. And it ripples across everything in the real estate industry. It ripples across the buyers, right? For what they can afford and what they can pay with the high interest rates. It affects the builders. The builders are freaked out right now. First of all, they've never caught up to what they were supposed to do. I've been saying this for 5 years. Builders were so touchy after that last crash that anything that didn't look perfect on paper, they didn't want to move forward with their plans because they thought it was too risky. But now we're like 3 years behind on new construction, and we're never going to make that up. And now they're slowing down again because of the inflation and the supply chain problems and all of that, and the high interest rates. Now they're kind of slowing down again. They were going to slow down their plans. So I don't think we're going to catch up with that new construction for a long time. You know when I think we're going to catch up with the new construction?
When?
Printed houses, 3D houses. That's when I think it's going to happen. I think that the 3D industry could totally transform developers, and developers might get caught with a new industry.
I don't know if I disagree. That is a fascinating little, like, I want to say, sublayer to real estate that could take off. But I felt the same way about like solar. I was like, this just makes way too much sense. Look at this. And then it just like, I don't know. There's got to be if there's a money power or like a lobby involved, it's going to squash it. But I don't. What is it in real estate?
Yeah, so I know, and the thing is, I don't see anything. So this is the big question right now. How many buyers have to leave this market before our little paltry inventory that we have now will become normal? Okay, so normal inventory is 6 months, meaning that it would take 6 months of the buyer rate, current buyer rate. It would take 6 months to gobble up all the homes on the MLS without any new homes coming on the market. How long would it take? A normal market would be 6 months. Okay,
if we haven't seen a 6 month inventory in how long, Jim?
Oh, I don't even know, Mike. I really can't tell you. And you know what? It's been years. But when we started the show, we were at 36 months. Some neighborhoods were 5 years when we started the show. 5 years of inventory in some neighborhoods, okay? Because nobody wanted to buy, or they did want to buy and they couldn't get a loan, right? So, after the crash. So we went from like on average about 24 to 36 months inventory, where we're down to 1 month of inventory right now in Palm Beach County.
Which
and
is
it's
about
not much.
We've been that for, I feel like, a year.
Yeah. Yes. And maybe even longer. Well, right around 1 month, probably about a year, but under 2 months, we've been probably 2 years of 2 months or less inventory.
Since the pandemic, really. Yeah.
So how many buyers? So we know that we're not going to increase inventory by new homes. We know we're not increasing inventory by more people putting their houses on the market. That's not happening.
Not judging based on how many people refied in these last 2 years. Like, those people are staying.
Right? Yeah. When you refied, you got 3.5% interest rate, and you're looking at, 5.11 without pay,
right?
Yeah, or 2.5, right? Why would you move? I would be rebuilding my house if I had to, right? I was like, I'll keep my house and rebuild it, make it the way I want, and go out and buy the new home, right?
Yeah.
So the only way I see that the prices are going to drop, okay, to like adjust based on the interest rate, because normally the interest rates, as they go up, right? As the interest rates go up, normally you would see the prices go down, but we're not seeing that. And I know it's early because this interest rate has gone up very fast in 4 months, but we're not really seeing the prices go down yet. Why? There aren't enough homes for the amount of buyers. So if you've got, like, if I put a house on the market and I have 20 offers in 4 days, like I talked about earlier in the last segment, and I'm not bragging, this is a function of the market. Okay. So I'm not saying, oh, look at me and beat my chest. I hate when realtors do that. You only need one good offer, guys, right? You don't need 20 offers. It's kind of an ego thing. But the bottom line is that how many people have to walk away, and how many of those 20 offers have to disappear before we get into a normal inventory? How many buyers? So I'm thinking right now we're selling for single family homes in South Florida, each county, not including Martin, because Martin's an aberration because it's a little tiny county and there's hardly any sales there. But for Dade, Broward, and Palm, we're seeing somewhere between, on the bad months, 1,200 single family homes sold, all the way up to 1,700, right? Roughly 1,800 homes sold in a month. Okay. How many? So if we only have 1 month inventory, does that mean we're only going to sell 600 homes a month in order for this to become a normal market? Do you understand what I'm saying?
Yeah.
So I don't know the answer to that because we've never been in this situation before.
Can I ask
All
you
of
this,
this is
Jim?
brand new.
Do we have a glut of buyers, or are there so many more buyers that they're just eating it up, or is the inventory problem because people aren't selling? So you mentioned the number of homes sold in a month. Is that normal? Is that low?
Yeah.
Is
So
it high?
our peaks from this show from 2012 forward, probably in like 2018, 2019. Now I'm doing this off of my head, so take that for a
won't
grain
quote
of salt. Yeah, take it with a grain of salt. But I remember like in 2018, 2019, not 2020, but 2018, 2019, good months would hit 2,000 in a single county would be 2,000 single family homes sold in 1 month. Maybe as high as 22 on a super duper month. Then we started averaging out about 18 a month, 1,800 a month. Now, I haven't done the statistics for the last year, but I'm basing just looking at it every month. Guesstimate would probably be 1,500 a month.
Okay.
Is the average, like from the high months and the low months of the year, is about 1,500 a month. So 700 less a month.
So the
compared to
active
peaks.
sales is decreasing. And so it's not
Yes.
necessarily that we have just so many people coming into Florida. We got all these buyers. It's just that not as many people are selling.
Might be
We
all
don't
of the
have
above,
enough
though.
houses.
It could be everything too.
Yeah,
Yeah,
because remember, he had 98 showings on that property. 98.
Yeah, that's
over a
kind of
weekend.
crazy. Yeah, that's kind of crazy. And here's the funny part. That house, I put that house on the market. It was a little villa in Boynton. And then I put the Pembroke Pines condo on the market. Those were the shout outs I did earlier today. Now that guy, the Boynton Beach one, had 90 something showings, 19, 20 something offers, right? We took a very good offer and a very good backup offer. The one in Pembroke Pines, we only had like 8 showings. But we got percentage-wise the same above asking price that we did with the 93 showings.
I mean, you just said it. You only need one good offer.
You only need one good one. So that's what you're looking for, is the one good one for your seller. But the thing is I don't know how this is all going to turn out. And that's what I love about real estate, is that it's different all the time. It was like me being, don't hold it against me, public, but I used to be a newspaper reporter for the Sentinel and the Post. And I love my profession. I was a crime reporter. I wasn't a politic reporter. So, I don't even want to get into that. I stayed away from the politics stuff. But I was a crime reporter. And the thing was...
Yeah, clown murders.
Yeah, exactly, right? But the thing is that we've never experienced this before, so we're in totally uncharted territory. I love that part because it's different every day. But we are handling things differently. So let's talk about that, the effects of this, okay? So for the first time, and Mike talked to this.
Hold on.
Go
Jim,
ahead, Mike.
people want concrete answers to the question of when are rates coming down and when are the housing prices going to come in line? What's the answer to that?
Rates aren't coming down. Okay, the rates aren't coming down. Okay, if you think the rates are coming down, you might as well take all your money, bet it all on black in Vegas. Okay, go to a roulette table. You can't do it in Florida. Go somewhere, bet it on black.
Yeah, it's not 50-50 because there's greens, but like 49% chance.
Yeah, but worse than way lower than 49% chance prices or rates are going to go down. The only way rates are going to go down, we have another pandemic. So
you're basically saying
the Ukrainian war turns into something different, God forbid, okay, that it spills over to the rest of the world more than it is now. Like that could affect things.
Yeah.
A dispute with China, right? That could affect things, right? Because there's such a big supplier of everything, right? All of those things could affect. We need to have massive unemployment to have the rates come down.
If people were predicting, you just listed like two major things that have actually happened. Oh, just maybe, hey guys, what if there's a global pandemic, out there? Or hey, what happens if there's some, pending, potential for World War III on the rise? Well, guess what? We just went through both of those things, right? Like, what do you have to predict that would be world changing, right? That we haven't already been through in the past, 2 or 3 years.
Yeah.
Crazy.
So it isn't, if you're betting that the interest rates are going down, okay, I want to play poker with you.
Yeah.
If that's what you're betting, I'll play poker with you. Come on, we'll sit down and we'll play some
So rates
poker.
aren't coming down. And then, so what about the other part? What about inventory increasing enough?
I don't see it increasing. I see nothing to make it increase. Nothing. The builders aren't building enough, fast enough. The owners aren't selling to change. It isn't like they want to downsize or upsize or holding tight for the most sake. There are always people that have to buy and sell. Even during the worst crash we had after the bust, people were still buying and selling at that point, just not as many.
Are there any innovators out there converting vacant commercial space to housing?
Well, they are actually. I met somebody last year, but the business model fell apart, so I didn't follow up with it. But they were doing those what do you call them? Not the pods, but the containers, the
Okay,
shipping
yeah,
containers, and turning
yeah.
them into
I
houses.
like that. Yep.
And they were doing them in West Palm. And let me tell you, they did not look like shipping containers. They were 2-story. They were
Yep.
putting the shipping containers together and building them like Lego blocks, basically. And they were 2-story, and they would build a facade on the outside that made it look just like a regular clapboard wood frame house, kind of.
Yep.
And they were nice, and they were super affordable. And I was like, wow, this could be really something. So
Let's say
that
that
might
something like that
help.
takes off. Is there land out there available to put those things on? Is there land inventory?
I could see, like, for example, there's a part just north of, what do they call it now? Rosemary Square. I forget. I call it City Place, but whatever
Yeah,
it's called
Rosemary
now,
Square.
Rosemary
Yeah.
something or other, right? So just to the north of that community, they're taking all those blighted neighborhoods and they're trying to turn it into something right now. And they're sinking hundreds of millions of dollars at developers over there. There's a lot of single family homes over there that could be easily torn down and then put on these like newer structures that might fit better with the new
More.
construction that's going on there. But
Okay.
but you'd have to sell it. So
These are
now,
very long term. That's a long term
mhm.
thing.
And
Okay.
it's one off. It isn't like you're going to collate, 30 of those properties and you put up 30 houses, because you got to deal with 30 individual landowners and see if they want to sell or don't sell. And then some of the other things that are going on with that is that now it's just so hard to figure out exactly what's going to happen here. It really is. It's really fascinating.
So there's
What's gonna
nothing to
happen next.
indicate that inventory is going to go back to normal or even halfway normal, like 3 months of inventory, 4 months of inventory. How
Don't
about
see
that?
it.
Yeah.
The only thing that's going to make that happen, in my opinion, is unemployment. And then unemployment's going to force people, and I don't want unemployment. Don't tell me. I'm not saying this is what I want, but it's the only thing I could see. The builders aren't building fast enough. The sellers aren't putting their houses on the market fast enough. So the only thing that's going to give us inventory, if people are forced to sell. They're forced to sell. They don't have a choice. Just like when we were doing short sales back in 2012 when we started this show. People couldn't afford their mortgage payment, so they had to sell their house, right? That's what would have to happen. This cycle would be a little different because there's equity in the houses. But I think if we got to the point where masses amount of people were selling their house, we'd be in some kind of employment crisis at that point.
Yeah.
And if we were,
if people were beginning or on the cusp or brink of defaulting on their mortgage payments, that's a good indicator, which I guess would be led by wage pressures, right?
Right. Exactly, which means unemployment, right? We would have higher unemployment. So that'll be the first signal to me. When we start seeing the unemployment start clicking up consistently, that to me will be a canary in the coal mine to look at, as an indicator of what might be, a shifting market. But right now, we're not seeing a shifting market.
Yeah, and probably better said if instead of when.
Yes,
Yeah.
exactly.
How about this, Jim? You talked about, I don't know time wise where we're at, but you talked about adjustable rate mortgages, interest only payment.
Thank you.
You want to talk about that now?
Yeah. So let's say, go ahead, Johnny.
Let me just before we do this little shift, let you know you can be a part of the show. If we're touching on something that you have a question, a comment, don't be shy. Dial 877-927-6969. Timothy online. Yep, we'll get you on the air. Should be able to handle most of your questions. If not, well, we will lean on the rest of the members of the team to get those answers that you need, accurate information. And the beautiful thing is you have a team with Florida Talk Real Estate. It's an entire team put together. You can find them all. Your one-stop real estate shop. Reach them all at floridatalkrealestate.com. Again, that's floridatalkrealestate.com. Calm.
So I get a call from this woman. I think she won't mind if I just use her first name because nobody ever know. But her name is Mary. Married with her husband. They have 2 kids. So they need a 3-bedroom place. Okay. They were renting. They were happy where they're renting. They were renting for years. And then the landlord told them just like a few weeks ago, we're raising your rate by $1,000 a month for your rent. Right. So we've talked about that in the year, the $1,000 a month increases. So she's in sticker shock. So at that point, she's like, I have to buy something. The family's got to buy something. So they went out to several mortgage companies and got denied. And then they found a mortgage company that says that they can get approved. She called on that property. I had 93 showings on. Even if she wanted to make her maximum allowable offer, which is, what do I call that, Johnny? Do you remember what I call the maximum allowable offer?
I don't.
Oh, Maui Wowie. I call it the Maui Wowie, the Mao. What's your Mao, right?
That's totally something different in my house.
Oh, no.
I've never heard that.
Yeah. I call it you haven't ever heard of me calling it Maui Wowie before?
No.
So,
but I think what Johnny's saying, that's a strain of
I know
right?
what it
Maui
is.
Wowie?
I definitely know what it is.
You put that on me.
Is that from Cheech and Chong? Maui Wowie, bro.
No, that was a 1970 strain of pot, and they called it the Maui Wowie.
I want to say Maui Wowie is reference. It's reference to the Cheech and Chong movie, though. It definitely
was it. They called it Maui Wowie.
I think so. I can hear him say Maui Wowie, man.
I can see that. I'm a big Cheech and Chong fan, but I don't remember them saying Maui.
Well, happy
Wowie.
belated 420 to you, there, Jimmy.
Yeah, I know, right? So, so what happened is, she called up asking about that particular property. She sounded like she's in a panic. I started talking to her. I could tell that she was in a desperate situation. And I said, well, I'm a little nervous that if you've been denied by several mortgage companies and now you have one that says yes, and you don't know why they said yes, you just know you got a yes. That's not always a good sign, because that might mean you don't have the right loan officer or mortgage broker. And,
Labrador.
Yeah, Labrador. Oh, yeah, that's right. I had Labrador.
That's the line from the movie.
That's so cool. So,
Labrador.
Yeah, exactly.
Yeah, my dog ate my stash.
Yeah, why I got blonde hair in my Maui Wowie. So what ended up happening was I got very concerned for her. I don't know this woman from Adam, but she's a first-time home buyer, right? With kids and a lot of financial pressures. So I said, you know what? This is how we do it when we work with buyers. If you want to come over to our system, we can do that. She said she wasn't working with a realtor exclusively, so I was able to do that. We got her over to Mike. And the thing I found out that was interesting is her loan was approved through the other company, not as a 30-year loan fixed, not as a 15-year loan fixed, which is normally what we've been seeing for the last several years. This is the first time the only way they could afford the home based on the interest rates and the purchase prices or the values of the homes in today's market is to do a 5-year arm. You're shaking your head, Mike? That's what she told me it was, a 5-year.
Oh, no, I'm shaking my head because it's crazy. I did talk to her, and basically was just trying to confirm, like I do with anybody, right? I'm not trying to take business away from other loan originators who are treating them right and doing things right. So they had a complicated situation, but it looks like the lender is confident that he can get it done. But he's doing a 5-1 arm on an FHA loan, and
I didn't even know you could do that.
There's a lot of points involved to get the rate that they're getting. And so here's the thing that doesn't make sense to me, Jim, is you can't qualify off of the teaser rate, right? You have to qualify off of
the main rate, the final rate.
Yeah, not the final rate, but there's something so when you're in an arm, it can adjust up to something, but so I don't know the benefit of why they're doing it that way, and I didn't want to push so hard just to because it seems like they got something that works.
Can I ask a question just to make sure I'm following along? So
Yes.
they're actually, you said points. So they're actually spending money. They're giving them cash to buy the rate down, and then
Yes.
they're in an arm, which is an adjustable rate mortgage.
Right.
So that money they spend to put them at a low level could poof. that rate could adjust way up beyond where they bought it to, and there's no timeline on that, and there's no saying it's going to happen either.
Well, it's 5 years. It's going to be fixed for 5 years, Johnny. And this is where I wasn't in the mortgage world, but I was a consumer back in those days.
Mhm.
And the thought process was always, let me get into this now because it's going to be a payment I can afford. I'm going to get my job's going to be better.
Mhm.
My credit's going to be better. I can refinance out of this loan.
You kick the can for 5 years.
Home values are going to continue to increase. Like all of these thoughts, which can make sense, except that you don't have a lot of control over some of that stuff, right? You don't have complete control over what your job situation is going to be in 5 years.
Right.
You certainly don't have control on what housing values are going to be in 5 years.
Right.
And so the risk with these types of loans was always that they're based on a future, hope that the situation is something you can get out of.
Speculation, like a lot of investments.
Yes, and the thing is I've already had conversations with Mary because we care, right? And we said it isn't just, oh, you can get a loan, let me go get your house. I said, Mary, look, as soon as you get into this loan, you got to start thinking as soon as you get into the loan that I need to lock in a fixed rate. So I know it might not happen the first year or something, but you got to figure out a way after you buy the house in order. I know you have 5 years that you're locked in, but the longer you wait, interest rates might be at 9% in 5 years. We don't know, right? They might be up to 9% by then. So try to,
and they could be down to
have a plan. They could go down.
Right? I mean, yeah.
Yeah.
I just don't even understand why they're doing it that way in the first place. It doesn't make sense to me why they're in the 5-year arm. I can't see the motivation.
Debt to income ratio is what I was told.
It still doesn't make sense.
Huh.
Still doesn't make sense.
As you noted, because you have to qualify at the rate that it is now, right?
Well, you have to qualify it. You can't qualify at the. So I guess this isn't a teaser rate because it's fixed for the first 5 years.
Mhm.
So I've never even done an ARM on an FHA loan. So it's a little bit of strange territory for me. But if they're paying points to buy to a certain rate, like it can't be the rate. You don't attack the rate to get to a qualifying debt to income ratio, right? You attack debt.
The debt. Yeah, you
right?
got the debt.
Like that's how you do that. Or so I don't know. It's
So FHA, the benefit there is 3.5% down, right? But they're also going to have an MI. So their numbers are pretty interesting, right?
MI is
And I know
mortgage
you're a total
insurance.
numbers guy, Mike. I've done my numbers game with you a few times.
Yeah.
It's always about what's your plan, what's your desire, what's your desired outcome, and here's your numbers. Does this work for you? And there's a couple of different avenues. Sometimes the numbers game in this one's fascinating.
And I am not I'm not doing the ARM, hey, how do we get you into this, relatively low starter rate? Like I'm not in that world yet, but I think to Jim's point, I mean, this is what people are looking at now, right? They're desperate to get into something. So I don't even understand how this one is working. And Jim said a couple weeks back, like, hey, we're going to start seeing this kind of like exotic style lending, right? Where it's just like configured just to get you into a payment that you can qualify for here initially. And I was a little bit skeptical. I'm like, there's no appetite for that, right? Like in the secondary market, like the mortgage-backed securities investing world, there's no appetite for these subprime, non-A rated style loans. But guess what? I'm getting emails from the non-conforming lenders talking about, hey guys, interest only payments. Hey guys, 5-1 ARMs. Hey, low LTV, low credit. I'm getting like bombarded by the non-conforming lenders because these are portfolio products, right? But they have an appetite. They're trying to get loans, or they're desperate and they're saying, holy crap, our volume is way down. What are we going to do? Like, how do we keep the wheels turning on our mortgage lending operations?
So Jim, if I'm listening to this, I'm thinking like from your perspective, like as a listing agent, and I know you're not one to have any prejudice towards any kind of lending, but a lot of realtors do. We hear it all the time. Like they turn down a VA offer, even though the VA
we talked about it last week live on air.
So it's not uncommon where they're like, oh, we just don't like that lending. To me, that feels like a very vulnerable buyer. And again, I don't want to put that on them, but that feels like you're really putting yourself in a tough position as a buyer to get an acceptable offer, unless you're the only one making an offer.
Yeah. And it can it's the way you present it, I think, also will help a little bit. But sometimes, no matter how well you present it, you're going to look weak to compare to other offers,
which isn't fair. But
which isn't fair. But the reports came out. I didn't get to review them, so I'm not going to talk about it this week. I'll talk about it next week. But the monthly reports came out for March. I can tell you this: in Palm Beach County, 48% of the single-family homes bought were cash. 48%. I haven't seen that in a long time.
How do you compete with that?
You can't. So I'm saying, well, I shouldn't say you can't, because sometimes the cash buyers won't pay as much as well-qualified finance people. So take the well-financed qualified people if you're the listing side.
And that's a conversation. That's like where you really need professionals advocating for you. Jim, we're about to have a buyer who's relocating from my hometown, Centerville, Virginia, and he's going to be, he's like top tier credit, putting 20 to 30% down depending on the situation, DTI, like so much space in the comfort zone. And I have to have that talk with him of, listen, you're not going to be the best offer in town, right? Like, you're going to be competing against cash offers, and but what do we do, Jim? It's like, this is a deal that will close. Like, how do we get that message across to listing agents? Like, not only are we, it's a strong offer, maybe even above ask, like we have some space to tolerate some movement on the appraisal. This thing's going to close, but it's financed, right? How do you compete with the cash offer?
It's so hard. It's like last week I was kind of upset live on air because one of our VA offers was turned down, even though that they're putting, listen to this, even though VA you could put 0% down, they're putting 80% down and only financing 20% of the loan, right? Now, you don't have to do the VA. They decided to do that. We got rejected to a 20% conventional financing, 20% down versus 80% down. I was livid.
You're essentially a cash buyer. I mean, let's face that. When you're basically a cash buyer.
Yeah. So
I had an opportunity to talk to that listing agent, Jim, and I was curious. And I said, well, what's going on with the VA loan? And she said, I could tell it wasn't a very well thought out objection, but it was something that the seller got burned on the VA loan in the past.
Yeah. So what ended up happening
a deal didn't close or something.
And here's the thing about having a good agent on your team is that I didn't let it go. And I pushed it. And then Natalie stepped in, Natalie Medina Rauch on our team. She turned in a counter offer to be in backup. We put ourselves into first position backup in writing, and then the deal fell apart on the other end. So we had the opportunity to slide into first position. Unfortunately, something else happened, so we decided to turn it down at the last minute, but we got it for the family, and I was very happy about that because we didn't let it go and we didn't give up, right? A lot of people would have just said, oh, we didn't get the deal, let's move on to the other one. And I was like, no, you always put in first position backup if you can, because you never know what's going to happen in today's market. And there's so little inventory. Just put it in there. If it doesn't happen, it doesn't happen. So you got to have an agent being super aggressive. And it's going to be very interesting, Mike. Like you said, you said you were being skeptical that the mortgage industry itself doesn't have the stomach for subprime loans and that kind of stuff. Yep. I never agreed with you on that, only because it's a business. It's just like what we went through with the mortgage-backed securities. Businesses are like puppies or pigs. They'll eat and eat and eat. If you give them enough food, they'll eat until they're dead, right? They just won't stop eating. They just give me more, give me more, give me more, right? Well, now we've had really great couple of years for being in the mortgage industry. Things have been so great. Low interest rates, great refis, great purchases, great. Well, now what's happening is they're seeing the availability of potential customers shrinking right now, and they still got to make their money, right? So they're trying to figure out what can we do to get more deals done on the table.
Or
and
even
that's where
how do we keep the same volume of deals that we?
That's what I'm saying. Yeah, exactly. Not trying to grow just to keep up where they were. And that's the problem with companies. That's why I left the Sun Sentinel. The Sun Sentinel, during the whole time I was with them, we were seeing like 10% year over year growth, 20% year over year growth, right? 25% year over year growth. And every year, no matter how big the percentage was, they wanted more the next year. Oh, we hit 25 this year. We need to hit 28.5. Oh, and then after a while, you couldn't hit it anymore. And they didn't care. They still wanted to grow it. And sometimes your business is better for the long haul is to stay flat for a little while instead of take risks and be happy with the profits you've been making up to that point. And then when you can see the opportunity to grow, instead of just saying every month we've got to grow over the month before. That's crazy town to think you're going to do that. That's
Jim,
how you get in trouble.
It takes some pretty level-headed foresight to be able to, like, you'll get these motivational talks and you have meetings and whatever about goal setting. Who's ever lowering their goals, right, to match reality, right?
Johnny's raising his hand.
Johnny's raising his hand. I do the same thing. Like, I knew when I'm talking about goals for this year versus the last 2 years where refinances were basically, off the chart, like abnormal. Like, how can you expect if refinances go away to have your purchase business make up that gap, right? So you have
with higher interest rates.
Yeah. Well, I didn't predict the higher interest rate quite as it's gone. I don't play the prediction game in general, but I would, you're trying to do goal setting. Like, I know that I'm not going to do the same volume because the refis they're going away.
I was talking to my broker a couple of days ago. He's in the top 100 of all the Keller Williams agents teams in South Florida. I might be too. I don't even know because I don't keep up with the stats, but I know he's in the top 100 for sure. And he talks to a lot of the top teams in the area because that's what his job is. So when I was talking to him a couple of days ago, I go, you know what? We've got a decent amount of business, but we're kind of flat compared to last year. We're not really down, but we're not up either. We're right kind of where we were. And he goes, look, Jim, compared to the other big teams, you're doing pretty good because if you're flat, many of them are down right now. Even the big teams that are doing super volume, they're not seeing the super volume that they were growing and growing. This year they hit the wall. And I can see that wall. We've struggled just to keep even where we were last year because the interest rates, buyers are getting tapped out.
Yeah.
And a lot of sellers or a lot of potential sellers are just not there yet. I'm sorry, Johnny, you're on mute.
Yeah, can't hear you, buddy.
Oh, sorry.
Okay.
Last year started strong for the team, Jim. So I mean, if you're even with last year at this point, you got. I know last year was gangbusters for you.
Yeah,
guys.
we're doing okay, but I had a certain goal in my mind when I started the beginning of this year, and we still could hit it. We could still hit it, but it's going to be done in a different way. It's going to be at a higher price point. We're going to have to be selling more higher price point homes to do the same amount of business as we did last year.
Always hated this analogy, but there's a ton of ways to skin a cat from what I've heard. I mean, I've never done one, but
yeah, there's a bunch of different ways, and you have to be smart to shift with the market. So there's a lot of tools in our toolbox that we're pulling out that we used to not do. And here's a couple of things to consider. So what we're doing, like with Mary's situation, right? The plan is, according to the mortgage company that they've chosen to use, they could either do 3.5% down FHA financing with this 5-year ARM thing, or they could do 5% conventional and at actually a higher price point, a purchase price than the FHA 5-year ARM. But if they did the 5% conventional, if we didn't max out what they can get at the I don't want to make real numbers, so let me just make fake numbers just to make it easier. Let's say they're good for 400 at FHA financing with the 5-year ARM. But if they did 5% financing, they could go up to, let's say, 450, okay, with the 5% financing. So what I asked the mortgage company is if they bought something for 425 with the 5% financing, could they pay above appraised value? Would they have enough cash reserves to pay a little above appraised value at the 5% financing? And the mortgage company said yes, and they gave me a number of what they could pay above appraised value. So that gives us the ability to write an offer where we say, hey, we're going to give you $425 for the house. If the house doesn't appraise, we'll give you $5,000 above appraised value. Okay. Right. As opposed just to turn in the offer at $425 and hope or 450 and hope we're going to get it, right? So there's a lot of different ways to negotiate this, but it's going to be tough. I'm not saying that it's going to automatically be accepted. And the other thing is you really have to have an agent in today's market to understand what options you have, because this family was focusing on single family homes. And as soon as I heard their price point and their struggles financially to try to get in their toehold into the market, I really feel like townhomes are better for them, right? So I started focusing on the townhomes. Why? Townhomes cost less than a single family home traditionally, okay? And you're usually in a better neighborhood. Now, the downside is you're paying an HOA fee, but I included that in there. And I think that they're going to end up in a townhome. They weren't really even looking that way that carefully until I stepped into the picture. So then what I did was this week I gave them a list of all the single family homes that meet their budget and a list of all the townhomes that meets their budget. And they right away saw that the quality of the home that they could buy is way higher with the townhome than with the single family home. So now we're kind of focusing on that. But this family is so, and the other thing is, Mike, you have to be super creative right now with this, because what these families are trying to do is have rent control. These people probably wouldn't have bought right now or not trying to buy right now if their rent didn't go up $1,000 a month.
Yeah.
Right. If their rent went up $200 a month, they'd probably stay renters. But what the concern is, let's say it goes up $200 a month this lease period. What's going to happen next lease period? You might be kicking the can down the road if you don't jump on it now.
Yeah.
Because what happens if the next lease period we're at 8.5? I'm kind of being a doom and gloomer here, but what happens if we're at 7.5%?
I think the maybe the moral to the story is, if let's say you're in that situation where you're renting and you're like, geez, should I buy? Or what you don't want to be is forced to do something on a timeline that doesn't work for you and your family.
Mm-hmm.
But there are things that you can do to prepare to be a buyer. And I'm talking about mostly credit, debt, and savings, right? Like, you should be, I don't care if you think you're like Johnny, like, I'm never buying. I'm never buying. What did you have to do, Johnny? You had to work on your credit before you were able to be a buyer. So people can do that work, right? There's credit monitoring services out there that make people very aware and in touch with their credit. They give you ideas. I am happy to talk to anybody about, like, what I would call practical credit improvement, right? Practical advice to how to get your credit into a qualifying score if you've had some struggles in the past. That's something you can do. So even if you're not considering being a buyer right now, what happens when you get that lease renewal that's $1,000 a higher a month? Are you prepared where you're saying, you know what, maybe this is the time to buy? So like Mary and them, they're kind of being forced to do that. And they would be much better served if they had focused on credit, say, over the past year,
Mm-hmm.
versus like forced to do this weird situation they're in now, which is kind of limiting their options, right? So I guess that for me, that's like, talking to people, like, work on getting the pieces in place so that you, when the time comes, you're able to make the decision that's right for you, right? They're right for you and your family. So
Mm-hmm.
I don't know, maybe we got to focus on some of that stuff.
And the other thing is, if you are going to get into this market, either as a buyer or seller, please have a team, have a mortgage company behind you, have an insurance company behind you besides the realtor, even if you're selling. Because you know what? If you don't know what's going on with the age of your roof or other issues with your house, like you have a flat roof versus a hip roof, or the age of the house, or the type of electrical or piping in your house, and you don't have people that already know about all that stuff and can raise issues with you. I had a house that we put on the market, I think it was 2 weeks ago or 3 weeks ago. Lots of showings, tons of offers, but the roof had prompted our first buyer just to walk away. They saw the age of the roof, it wasn't leaking, but the age of the roof and the age of the AC, our cash buyer just said, forget it, we don't want the house, and they walked away. Now we went into another deal, equal to, maybe a little bit better, I'm not sure, as to the other deal, but then we did have to negotiate on the roof and the AC. We had to. We just didn't have a choice, and we negotiated. Now the family seems to be very happy with the results that we have right now. But I had that conversation with them 3 months ago that this day would come, that we're probably going to have to deal with that roof and the AC. I didn't mention it to the buyers, but both buyers brought it up. So when the sellers found out about this, they weren't blindsided. They were prepared. And let me tell you, that is a big deal, because if you think that you're getting this super happy number where you're doing your happy dance like Steve Martin on the, that's a pretty old reference, like Steve Martin Happy Feet dance, right? And
I don't even know what that's from. Is that from the
Saturday Night
SNL
Live.
or is it like
Yeah,
from the joke or
SNL.
something?
Well,
Okay.
also his stand-up comedy, but he called it the Happy Feet dance. That's back when he used to do the banjo and all that. But the thing is, you get all happy and excited, you're going to get this number, and then what happens is that then you get this big blow. It's like, hey, you know, your roof, your $50,000 roof, we want to start negotiating that $50,000 roof. Then you got a problem, right? And then you're not so happy. But if you know ahead of time and you have a plan and you know how you're going to execute that plan if you need to, it gives you so much more confidence as the seller is to know that you're going to be able to pull this off. You know what I mean? So you got to have the team now, whether you're a buyer or a seller. You got to have the mortgage company, the insurance company, Ross Camarinus from Brightway Insurance, Juno Beach, the only Brightway Insurance office as far as we're concerned. Don't be calling any of those other ones. If you're not calling the Juno Beach office, you're calling the wrong office, right? Because Ross is awesome, right? And you got to have a good agent and a good team working with you to try to get this done. You know, you really do. You know, we blew our commercials through so bad today, Jimothy. So we're just going to keep going. Is that okay? Because there's okay, we're going to keep it going. Okay.
Let me just do a quick commercial for FloridaTalkRealEstate.com. Then that is your one-stop real estate shop. Jim says, you know, you got to have a team. Well, you get a whole team when you go to FloridaTalkRealEstate.com. Not just any team, a team of pros, and man, they do work so good together. I've seen it with my own eyes. I've connected them. I've been to in between. I've been a part of the communication. It is a reality. They're all very good at what they do. They communicate well, and they're all very much on the same page. That is to get the desired outcome that you have for you and your family. And look, sometimes there is some work that has to be done. I can speak from experience, but it's laid out for you. Here's the path, and this team is here with you every step of the way. And some paths are rougher than others. Again, speaking from experience. But you know what? At the end of that path, my home has been a great place to raise my daughter. We're going to be, I think it's 8 years in September in that house. So you do the math. It's been a nice long run for us. And you can have similar outcomes. Buying a home, selling a home, refi, dealing with property insurance. I know the student loan debt thing is going to start cranking up again. Look, there's help for you to be done through this team. Foreclosure defense, if you find yourself in this situation, like don't bury your head in the sand, as we've said for so very long. Confront these issues with information because it's so powerful, and you can get it all. FloridaTalkRealEstate.com.
Yeah, we shouldn't.
Go ahead.
I was going to say we shouldn't lose sight of, like Johnny just mentioned, his personal experience like that. We're kind of, you know, maybe it sounds a little doom and gloom as far as like the outlook, but the dream of home ownership is still a very real, tangible thing for people. And Johnny, you probably, I wasn't around when you did that purchase, but I can see a turn in your life, right? Like that puts you on a path toward, I mean, look, you just mentioned it, right? You got a beautiful family, you're a homeowner, your credit's right. You know, like all these things that were like kind of prompted from that journey, right? All growed up.
Mike, when we went and got in my wifey her new car, it would have been a year ago, a little longer than a year ago, like a year and a month ago, 2 months ago. You know, I had an expectation. I told him what I wanted my monthly obligation to be, no more than. And he's like, "Well, what do you think your credit is?" And I threw a number out, and I'm like, "I think it's probably about that." And he went, they ran our numbers, and he comes back. He's like, I got terrible news. And I was like, oh, here it is. Like, I'm just not going to be able to afford this.
I've been
and
there.
He goes, you have the pick of the lot, whatever you want. Your credit is, and I was like, what?
Top tier.
Yeah. So those are values you get from not only being responsible, like I had to get married to get responsible, no doubt. My wife is my backbone in so many ways, but I had to be shown how to do things through the team. And again, I had to chip away. It took some time, but where there's a will, there's a way. If you have desire and you want that, that's your goal. Well, you do it a little bit at a time. It can't happen overnight, and it didn't for us. But we wanted it, and we worked towards it. And we're in the process again of trying to morph my mom into the family, selling her condo, put our house on the market, get another. And look, things aren't working out for us right now. If you've been listening to this show, it is not working out for us right now.
I know.
But that doesn't mean we're like, can't do it. No, because I got this team, and I know if it can happen, it will happen because we want it, and they're going to show me how to get it done. And it might not be the most smoothest of paths, but we'll do it together.
It has been a little bumpy right now, but the other thing is, for perspective, when you came to us in 2014 to buy the house, like Mike said, we had to work on your credit. You really didn't have the down payment and closing costs we needed at the time. I think you got down payment assistance, if I'm not mistaken, through that program and some other things. So you were able to get in. Now, when he's selling, he's going to have a big fat wallet of money. It isn't all profit because he paid down his mortgage and he put money into the house to make it more valuable.
And I refinanced where the plan was to be in this house for 10 more years at least. So the good news is that I still have, a good equity positioning, even though we refinanced and did some cash out. But yeah, the plan wasn't to be selling. I mean, by any stretch of the imagination. When we refied, this is where we're at. But I mean, I guess a plan that can't change is a bad
But
plan.
you went from not really having the 3.5% down for FHA financing to having probably, I don't want to get into your personal business, but like 6 figures plus in equity in the house. He went from that extreme to the other extreme, which is really nice. And that's what happens when you become a homeowner. It happens all the time. This has been a statistic that they've been talking around since the 1960s, at least. You have 2 people, the same exact career path, same exact money. One never buys, the other one buys earlier in their career, like at the time that you're supposed, people normally buy, getting married, having kids, right? And you look at the pure wealth of the 2 people, the person with the house always has way more wealth than that person that decided not to buy. Because it's almost like a forced savings account in a way. You're paying down your mortgage every day, every month, and you're doing all that stuff. So
there's another way, Jim. I got a good buddy. It's funny. I was talking about it yesterday, but he was a career military, and he never married, never had kids, never bought a house. And he's my age, and he's now retired. Finally bought a house, but so that's one way to do it too. Just stay single, right?
Yeah,
he's retired at your age. That guy did it right.
Yeah. He's retired.
And that guy, I know who Mike's talking about. That guy is super, super cool. That guy he's just a super cool dude too. Also, so hello, Johnny, if you're ever listening. He used to listen a long time ago. I know exactly what you're talking about, but that's awesome. And thank you for your service.
Single. Yeah, no wife, no husband, no kids. That's one way to do it.
Yep. Hey, I want to talk a little bit about news about renters, because we were just talking about Mary's poor situation where they're jacking up their rent $1,000 a month. That's the notice he got, which prompted him, oh my gosh, we got to buy something right away. Lake Worth Beach passed a law, an ordinance like 2 weeks ago, and I'm sorry that I haven't mentioned this earlier, but it was in the Post and Sentinel. The city of Lake Worth Beach, and I keep calling it Lake Worth. We didn't even ever do a little show about that. They changed it to Lake Worth Beach, but whatever.
I didn't know that.
Yeah, they changed the name to Lake Worth Beach like 3 years ago, and I had it on my list, never talked about it. But anyway, Lake Worth Beach, they just passed an ordinance that if you're on a month-to-month lease, landlords are not allowed to raise your rent without giving you 60-day notice.
2 months, that's right.
2 months notice, right? And they did the same thing down in Miami somewhere. Palm Beach County Commission is saying that the county attorney doesn't think that it's going to fly, so they're not really leaning towards that right now. So
you mean it's not legal to restrict landlords to how much rent they can charge?
I know. So there was an
That doesn't
article.
restrict them though. It doesn't restrict to how
Right,
much they
that's
can
my
charge. It
attitude.
just says you have to give them 60-day notice.
Yeah, like this lady, there was a lady quoted in this lady, Vicky, was quoted in the story where she says, I want the freedom to ask for whatever rent I would like to ask for. And I understand that. She's an investor and she invested money into that city to make a profit. Totally get it. You know, I believe in landlords too. They do provide a valuable service. Believe it or not, people don't like them right now, but they provide a valuable service and they like to make money. And I want them to make money too. I work with a lot of investors, but they're not stopping you, Vicky, from charging whatever you want to charge. They're just saying, hey, you got to give your tenant notice that you're going to raise the rate. You know, that's all they're saying is you got to give them at least enough time to say whether I want to do this or not. You can't just slam them and say, hey, I want the rent right now to be jacked up. I don't think this is an unreasonable request considering that we have the highest rental rate in the country.
Yep.
We beat out San Francisco and Manhattan.
And I guess when you really extrapolate this a little bit, you're only dealing with people that aren't in leases, right? Because if you're locked in on a lease,
right?
You ain't raising my rent anyway. So we're only dealing with people that are on month to month, and you're just basically saying, can you give them 2 months notice?
Yeah, I don't think that's that unreasonable considering we're in this crisis.
I agree, right? Like I think landlords have a certain responsibility to their tenants to treat them properly, right? Like I feel like that, and probably most landlords do, right? Like this, and we're not talking about
slumlords and stuff
slumlords, right? We're not talking about that type of thing. But if they have a contract that already spells out the notices that are required, like most leases, Jim, the standard lease has some language in it already about notice, right? And about renewals and about transition from a year to a month to month. Like if they've already got a signed contract to that effect, that doesn't take precedent over this new ordinance. I mean, I guess it wouldn't, but I could see legal challenges to it, I suppose.
Yeah, there's going to be legal challenges, but my advice to the renters, because I want to focus more on the renters right now, get in a lease. Don't put yourself at risk. If you're on month to month, 60 days from now, and this is only in Lake Worth, all the other areas of Palm Beach County, they can do it to you right away. They can give you a 15-day notice.
If I were a renter,
15-day,
and I was going to be a renter, I would want to get the lease for the longest amount of time possible.
Exactly.
Right? Give me a 3-year. Give me a 3-year lease.
I just did it myself. I'm still not sure where I want to live. I know I'm a realtor and I don't know where I want to live. So I'm living on the beach right now in a rental place. And
on the beach, I was thinking a tent or something like.
Yeah, exactly, right. So I'm living
down by the river.
So what I did is I'm not sure I want to buy something in November. So I worked it out where I set my lease all the way until July or June 2023. And I gave myself some options to get out of it.
Nice, good.
Right. But in case I want to, the interest rates get too crazy for me or something, or I finally figure out where I want to live, or I decide I'm going to get a dog because I can't have a dog. That's my big thing. Do I want to stay on the beach and live in a condo with no dog, or do I want to get a single family home and get a dog? And I can't decide what I want to do yet.
Have you considered an RV or trailer?
No, but I know a lot more people that are doing that now.
I talked to somebody who that's his plan. He's going to sell now because he thinks it's a good market to sell, and he's going to get an RV and live there until he's ready to buy.
Yep.
How about that?
And then he'll pay 9%. So congratulations that I did. I might be too.
Yeah, my question is, where do you put the RV? Like, don't you have to pay to park at these facilities, right, Johnny? They have like monthly rent and.
I have a buddy doing it right now in Delray, exactly what you said. And he's paying like only $500 a month, including water and electricity. It's so cheap.
And I know there's different KOAs and different spots. So if he's all right kind of relocating, you can do it kind of on the cheap. I know gas is not really very
my guy doesn't move it. He just has it there and he just keeps it there.
And he's totally overpaying for that RV too. If he'd have bought that thing 5 years ago, it's a totally different market than it is now.
It is.
Jim, is it legal? Is it legal for me to get several trailers and park them on my land because I have some space and rent
Oh,
those
that's
out?
a good question. I don't know
Can I
the
do that?
answer to that. I don't know the answer to that.
That'll be my first. I'm going to start solving this housing crisis right now. I'm gonna put some tiny homes all over my yard and rent them out. Can I do that?
Yeah.
Why
I
couldn't
don't,
you, right?
yeah,
I
I
mean-
don't know the answer to that. But yeah, so if you're a renter, my strong suggestion, talk to your landlord, get in a lease if you're on month to month, because the day's coming. And why would a landlord who has, and just to be fair, if a landlord's been charging $1,300 a month for a place, and now he knows he can get $2,000 a month or $2,100 a month.
Sure.
If you were the landlord and you took your renter hat off and you put your landlord hat on, wouldn't you want the extra $800 a month? That's like $10,000 a year. Who isn't going to want to do that?
I think, but there's something to be said for having good tenants who take care of your property, who pay on time, who kind of treat it as their long-term home. So, yeah, it's landlords. I think most landlords are thinking about the quality for their tenants, right, and not just jacking it up because they can make the most money switching to month-to-month or short-term rentals, right, the Airbnb and stuff. But it's an investment. It's an investment. Like it's there to make
for
money.
business. And I do know a lot of landlords. You're right, Mike. And I know people probably saying you're full of it, but it's true. I know a lot of landlords that are paying under rent, charging under rent, what the prevailing rate is in that area. And you know what they tell me? My guy's been with me for 10 years and he's paid me on time all the time.
Yeah,
and it's cash flow.
There's a lot of reasonableness with landlords too. Not everybody's trying to jack up no matter what, But
Mike, as Mike noted, there's a value to knowing that who's in your home cares for it like it's their own, doesn't call you for everything, like the big things, but they can handle a few little things. They're not nickel and diming you on all the little repairs. Like there's a lot of value. I had a landlord once. She might be listening right now. Hi, Ms. Donna, if you are. She actually decreased our rent to incentivize them not to move, and we stayed another year because of it. I was like,
yeah. What year was that?
That happened to me
before we bought
year.
our house. Yeah, but that's a totally different time. But she valued us in the home and was like, stay.
That happened to me this year. Last year I was with the landlord. He was so happy with me staying there, and I always pay early. He doesn't have to do anything with me. He knows I take good care of the place. He reduced my rent this year compared to last year significantly, almost 10%. Who does that? But this year, if I extend it, I'm going to be paying that 10% plus more. But it's still I still feel I'm getting a pretty good deal because he's been a good landlord too. He's been excellent, right? I haven't really had a lot of problems, but if there was problems, he was right there. Hey,
on the other side is like the tenant that I used to be back when I was living with my brother and a roommate, and we were, we had our beer bottle collection, and the cabinet on the wall, and like we were like party, Animal House style. So you have those renters. I think you jack up the rate on them. Don't even give them 60-day notice.
When they turn the walk-in closet into a grow room, jack up their rent.
The electricity bill, Johnny.
So I know we're almost out of. Yeah. I know that we're almost out of time. I want to say, we've been saying for 10 years, this is our 10th year on the show, that the South Florida real estate market can be tricky, right? Well, we've been pretty blessed for about 3 years now, but now we're in total tricky navigating waters right now. And if you're not sure what you want to do, we're the team that you should be calling. We're going to give you the right advice for you, not for us, for you. And we're going to give you all your different options and try to solve your problems the way that you need to and give you many options. All you got to do is we're one phone call away 24/7. You call 888-973-7828, and you just leave a message with our phone service, which is a live service. And we're going to call you back and we're going to get to the bottom of what you need to do. So please pick up the phone and give us a call. We're here to help you. Okay. One last thing I want to say, Johnny, I know we got less than a minute, then I'll let you do the roundup. Student loan people, we haven't talked about student loan right now. There's a lot of changes going on. They're trying, I think 40,000 people are going to have all their student loan debt forgiven across the country. 40,000 is nothing. It's like it's not even a flea on the dog. It's the amoeba on the flea on the dog. But it helps, right? It helps. But there are going to be hundreds of thousands of people supposedly that are getting a discount. Just give us a call, because the ability to pay program is still better than any of these programs. Paul Krasker's been using the federal government ability to pay program, where you only pay what you can afford based on your income. And it's still there. It's available for you. All you got to do is pick up the phone and give us a call if you have student loan debt.
Yeah, because information is power, and it helps you determine the best path for you moving forward. So get that information, and it can be free to obtain it, by the way, at floridatalkrealestate.com. Information is power, and don't worry about, oh, man, I don't got a ton of money to spend. You can find out your positioning and maybe get the things done for less than you'd imagine. I think probably have an image in your head of, well, that sounds like an expensive program. We've broken down the numbers many times over the years. If you're making your payment, your student loan payment right now, and you do that every month, you can afford the program. Trust your boy.
Oh, yeah.
Go to floridatalkrealestate.com. It's your one-stop real estate shop. Again, access to the entire team. Remember it. Write it down. Love it. Use it. floridatalkrealestate.com. Mike Rauch, mortgage guy, mortgage firm. Have a great weekend.
Thank you, brother.
Jimmy D, Florida Home Pros, Keller Williams, my friend. I hope you have a good weekend as well.
Thank you, Johnny. You too.
And thank you very much for being with us. We'll be back next Saturday, another 2 hours of infotainment. And I do encourage you all to stick around the locker room. It's Joe and Greek and Jimothy. They're next. Thanks for being with us every Saturday right here on Real Radio.